Hey guys, you've joined us live at Moneycontrol. I'm Manisha Gupta, and it's a day when we have the gold prices trading at an all-time highs. It actually is happening for a third straight day right now. So we've broken above $2,150 an ounce as well, and 65,500 rupees at 10 grams in the Indian markets is now a reality. It has been a one-way street really when it comes to the gold prices globally and for the Indian markets as well. The last 1 week actually has seen almost $100 of a jump up in international markets and 2,000 rupees of a jump up in the Indian markets as well. Is it a good time to buy? Should you be holding, profit booking, and what is 2024 have in resort with you for from now on? All those questions we'll put to Mr. Surendra Mehta of India Bullion and Jewelers Association. Mr. Mehta, wow, what a run up in case of gold, and this is the time when you have equity surging, Bitcoin is at an all-time high, is gold at an all-time high as well. What's happening with the money moving around?
We'll have to, I think, rewrite the textbook. It was never written in the textbook that all the asset class can rise, at all together. See, the important point we need to understand: the gold prices have suddenly gone up because of the expectation of Fed rate cut, and which is being supported by some Middle East geopolitical tension. In my opinion, we have seen a big rally from 2036 onwards to $2,161 in spot market. That's a very big move. And I personally feel that after the yesterday's speech of Fed Chairman Mr. Powell, he somehow sounds still very cautious about the rate cuts. So one should be very, very careful entering into the market at this price. Last time on when we saw the in the spot market high of $2,135, the next day the gold went down to $2,010. So one should be very careful at this point of time. So whenever the gold touches the all-time high, it drops suddenly, and it drops by almost $90 to $125. So I'm expecting a similar drop this time. Maybe tomorrow or maybe Monday or any time in the next week. But Indian customers, Indian investors and traders needs to be careful. Tomorrow is going to be holiday. The MCX will open only in the second half of the day. Then there are Saturdays and Sunday. So better do not take any tension for the weekend. So all your trade should be carried out beyond Monday.
And tomorrow is the US non-farm payroll data as well. Do you think that can be the catalyst, the kind of number that we can hear, the reason that you will see profit taking coming in?
I have always seen that whenever there are data coming on multiple dates. So one day the gold will go up, the second day gold will fall, or one day gold will fall, the second day it will go up. I'm expecting something similar tomorrow. And tomorrow being holiday in the Indian market, we may not get chance to exit. So it's better one needs to be very, very careful.
All right. Let's talk about the long-term investors now. And of course, we've seen a huge run-up in gold. And as you pointed out, wait for dips perhaps to buy gold. But with the kind of reports being put out with expectation of a 2,200 and a 2,300 and a 2,400 as well by the end of this year, what's the level that you're working with?
See, if I have to buy physical gold, I will always see that I have to pay 3% GST in the Indian market, correct? So what is left, suppose the gold touches $2,300. So what is remaining with me is only $70 or $80. So why would I invest for just for 4% return and when this $2,300 is expected sometime in 2024? I would rather invest in fixed deposit and so I personally feel that this is not the time to invest.
Okay.
This is not the time to trade. One has to be very, very careful and just look at the historical record. Whenever gold crosses all-time high, it drops suddenly. So one needs to be very careful at this moment.
All right. Even if some people want to buy gold, because now the portfolio diversification is the norm now, and where the central banks have been buying gold, ETF buying has picked up as well. So if an investor wants to include this in a portfolio, I know your answer already. It's going to be the sovereign gold bonds, and people who bought the last couple of tranches must be sitting on profit already. But do you think this is the way to go?
Yeah, definitely. Sovereign gold bond is my favorite investment mechanism as far as investment is gold is concerned. Unless you really want to convert your bullion into jewelry and flaunt with the jewelry. Otherwise, I think sovereign gold bond is a very good investment. I'm still saying that we should be very very careful investing at this point of time, and also we must understand that whenever there are any code of conduct or election in our country, the rupee appreciate by almost 1.5 to 2 rupees. So there is a good chance of rupee appreciation. The rupee might touch to 81 rupees in next 2 months time. This is my expectation, and also a sudden fall in the gold prices. So this bundle together can give you a fall in the gold price by almost in Indian market by about 4,000 rupees. So one has to be very very careful at this point.
So you're saying that you're expecting 61 to 62,000 rupees of a gold price going forward, and that perhaps is going to be a good time to buy?
I think we need to discuss at that point of time. At that point, what does the chart says? See, I'll tell you something. When the gold touched $2,135, yeah, it dropped up to $1,977.
Right.
Almost drop of about $200 or so. Okay. When the gold touched $2,080, it dropped to $1,610. When gold topped to $1,911, it dropped to $1,032. So whenever it crosses all-time high, I'm always worried, and I recommend not to venture into such risky trades.
All right. If you look at the gold and silver ratio, silver seems quite supportive. Are you bending on that side?
Well, I think silver has always been a good buy at this point also, because silver is more volatile than gold. Of course, if you leave the last week scenario, then silver is, I would say that downsize on the support at silver in Indian market is somewhere near 68,900. But upside in 2024, we can see about 95,000 to 97,000, or maybe 105,000 also. So silver, one can add in their portfolio, provided they are prepared to take about 10% of the risk.
So what you're saying is that it is going to be yet another volatile year with the kind of numbers that we're talking about, especially for the Indian markets, with the kind of currency moves that we could be looking at as well. So if somebody was investing and not buying physical, those buyers or those investors are for long term. For a trader, what should be a timeline to trade?
Day to day should be the timeline to trade for the trader. They need to be very very careful, because I have seen, just look at, I think 4th December it was, or 2nd December, I don't remember exactly.
Yes.
$2,135 to $2,010 next day. Gold prices. So, and then we have seen silver prices from 77,000 dropping to almost 68,900. So as far as silver is concerned, 10% is the key. As far as gold is concerned, 5 to 6% is the key, which can be your support level.
All right. So the current momentum on how long does it work is something to watch out for, but cautious is the word on the street. Mr. Mehta, as always, thank you so much for that deep dive in case of precious metals there. Well, yes, a profit taking perhaps is not too far away, because the last $150 per ounce of a jump up in gold has been too much, too soon. The rate cuts is yet to happen. You could be part of this momentum. Profit taking perhaps is the next thing coming in.